All right, we are talking cash flow projections and strategies. It's that time of year. If you have a calendar year end that you hopefully have wrapped up your budget planning. And even if you don't have a calendar year end, I know we've gotten, it's not just this year, but many years, lots of questions about putting together documents for clients about cash flow. Like you have your budget and you have your reports that we provide on a regular basis, but you need internally, or the board is asking for some sort of cash flow document. And with the environment we have today with COVID and different types of funding and funding sources ending, or lag in payments of funding sources, knowing how to calculate your cash flow is really important. All right. Let me get there we go. So our objectives today. Talking first about what is a cash projection and how do I prepare one. Getting ready to do that, some tools and strategies, and then any discussion or feedback that you would have that you could share with us about obstacles you face in pulling together a cash projection, or questions that you have around cash projections. Because we know that's not what you do every day, all day, is these financial projections and budgets. So we are happy to help wherever we can. So first, what is a budget versus a cash projection? And a lot of people may think that's one and the same, especially with smaller organizations. But really your budget should be on an accrual basis that matches your income and expenses based upon when they occur, and it doesn't always translate into cash. So one of the things that is an example here is on a cash basis, you do receipt of a check. On accrual basis, if someone promises to give you $10,000, or you get an award letter for $10,000, you're supposed to recognize that when it happens, not when they pay you. Or if you have insurance due in 2 months, but you got the bill today, putting those things in payables and receivables help match your income and expenses, versus that receipt check might occur today, or it might occur 3 months from now. Even though you got an award in September, you still may be waiting for the cash today. And this is really hard, especially with nonprofits, because you have to expend the money and you may not have it, or you may have other money that is restricted that you can't use. So there's a lot of moving parts in knowing what cash that you have. What would a cash projection show your organization? That's different from your financials or different from your regular budget. So a cash projection should show the timing of cash inflow and outflow by month, or sometimes even a shorter length of time. Because if you have some significant cash flow issues and you have payroll every 2 weeks, you may want to do a cash projection for every 2 weeks to really monitor what expenses are coming up, your ability to pay them, or what communications you need to have to your stakeholders about your cash flow needs. Multiple scenarios for a cash projection if needed. We were just talking about our budget yesterday. Jenny and I met for an extended length of time. We're running different scenarios. You know, what if we add 2 people, or what if we add this technology? What if we, cut this technology? Different scenarios. Or what if the revenue changes by 2%, and then you need another scenario where it changes by 5%. So you can have lots of spreadsheets going on, but you may need those to communicate what you feel the cash flow is going to be. This will also show if you have a need for alternative cash sources. And we won't get too deep into it today, but loans or lines of credit, different resources that you need to tap, this will show you if you're going to have that need. And then lastly on this slide, it will identify areas of risk, especially what months are typically more risky than others, lag between funding, so on and so forth. Whereas an overall maybe organizational budget that just shows 12 months is not going to give you that deeper insight into the cash operations. So now we got to get ready. And this is blank for a reason. Getting ready to do things like this, you really have to clear your plates or clear some time off your calendar. And this might be probably the hardest part of pulling together anything, is when you are really busy and it's not something that you're comfortable doing, or you don't like math, you don't like numbers, you're not comfortable with Excel or the unknown. Clear your plate, set aside some time, and jump in and start doing it. So kind of your meditation moment before you get into cash projections. So the tools that you need, the cash balance, which we'll talk in much deeper detail, and then having a plan. So these are tools that you need. You've cleared your plate. How do you get ready? And we're going to dive in. Ownership. Someone needs to own this process. And as a leader of your organization, it is your responsibility to lead the organization, including the cash management of the organization. Other people can help and provide insight and resources, but really the ultimate responsibility of recognizing that you need to do it, make sure that it's happening and happening on a regular basis and is communicated, is responsibility of the leadership. The board and the staff, they also play a role, but as a leader, you're responsible for making sure that that is happening and that you know what is going on within the organization. And it gives you the, power, the control to be able to have a narrative and to feel confident about communicating the narrative, if it's good news or bad news, that you have a handle on the situation. I wanted to talk a little bit about Support Kansas City's role, or an accountant's role. And that might be that you have someone helping you that's a volunteer. How can you be supported by Support Kansas City or other accountants that are helping you put together a projection? They can offer a lot of support and guidance. They do this on a regular basis. We have templates that we can help pull your information in, and we can review a projection. But unfortunately, we don't know all the deep details of the cash projection or the timing. So you'll have to dedicate some time to work with other individuals to be able to pull the projection together. You're not out there alone, but someone has to lead the charge. So we are here to help you, or other people that believe in your organization will be, hopefully standing there ready to help you pull a projection together. All right, cash. That seems really simple. Like, I can look at my bank account and know what I have available to meet my needs. And I can look in the savings account and I can see that. But for you as a nonprofit organization, you're well aware that cash doesn't always mean available cash. So before you can do a projection, you have to be able to articulate what cash you have that is available to meet your operational need. So that means, what is your unrestricted cash? So today, what is I have $100,000 in the bank, but is that all unrestricted, or is $75,000 or even $100,000 from that funder that wants to fund a project that doesn't start until next month. So do you track your unrestricted cash balances? Your first question. At any time, could you quickly calculate your available unrestricted cash? I will tell you that Support Kansas City has several different bank accounts and several different restrictions. And it took a minute when I became CFO to be able, in my mind, to really go, okay, this is what's in this bank account, and this is what's in the second bank account, this is what's available, this is what is from funders, and I can't use it right now. Or, yay, I can use it this month, so I'm going to transfer from this account to the other. But I have a spreadsheet, and every month I calculate releases of restriction and money that is now available to meet operational needs. So for some organizations, we may do an unrestricted report for you, and we can turn that into a cash report and help you calculate your unrestricted cash. It may not happen overnight. It is a journey. So I wouldn't be defeated if the answer to this question is, uh-oh, I really don't know what's unrestricted. It's a process, and we can help you get there. As I mentioned, the difficulties in calculating available cash sometimes. You may have multiple bank accounts or just one that holds all the different monies. So it may look like you have a lot of money, but you can't use it. Multiple restrictions, grants that you have gotten that haven't been fully funded. So they may have made that first payment and you're in the middle of delivering grant objectives and they haven't funded the second payment, but you've already spent more than half the grant on delivering that project. Same thing for reimbursable grants. It is what that name is. You have to spend it before you get it reimbursed. So you have to have reserves sometimes to fund the upfront cost of grants that are going to pay cash later. So government grants, city grants, right? They're notorious for, hey, we want you to do this project and we believe in you, but you're going to have to upfront the money and then we'll reimburse you, 60 days or 30 days after you turn in your invoice. So that's tough, and you need to know, yeah, I spent that money. When am I going to get it? And how does that affect my ability to pay other obligations? What happens when cash flow problems arise? I think everyone's aware of that. As nonprofits, I think if you haven't had cash flow problems over the life of your organization, then count yourself very lucky. It can cause late payments, of course, and penalties and interest, only making your cash flow problem worse. We see sometimes that we'll get maybe a new organization, or organizations will contact us that they don't have enough money to pay payroll taxes. Of course, that's a huge no-no, and can have even deeper impact, and board could be responsible for some of those unpaid payroll taxes. Skip payments to leadership. Nonprofit leaders are so passionate, and they will be the first to say, don't pay me. And that's really, a hard part of a cash flow problems that you want to understand before they happen, and you have to make these kind of decisions. And last year, I have loaning money to the organization. That's a slippery slope, we all know. So these are just some things that happen, and we've seen when cash flow problems have arisen, people are just still trying to deliver the services and keep their nonprofit going. So the next step is, this is a continuation of our budget conversation. And have you completed a well thought out budget? So don't try to do your cash flow projection maybe until you have your budget thought out, because you want to make sure that it aligns with your budget. Is it broken down by month or maybe even quarter? Your budget may be an operational budget for the year, and you're going to turn that budget into a cash flow by month. And how is your budget different from cash flow? So many budgets that we see, again, small organizations, they don't have a lot of resources or capacity to sit here and run different scenarios and budgets and cash flows. Sometimes their budget is cash basis and represents what they feel in their head the cash flow is going to be. And then when we help prepare their financials, it won't align, right? From that one of those first slides I showed you about how we record cash versus accrual, and then you're spending all your time explaining to the board or readers of the financial why your budget and your cash flow is different, because the accounting is not cash basis, but your budget is. These are all things that we can help talk through. I also see, like in a lot of budgets, understandably, that you'll budget release of restrictions or something like that. And when the financials come out, they don't show it. And people are wondering, well, why does the carryover not show up in our actual when it's on the budget? So let's talk about some things before you get into the fun spreadsheet. Let's talk about some things that you need to consider about your inflows, like what's going to get in the bank. Do you have collections of receivables for fees for service or pledges? So for Support Kansas City, we do a lot of fees for service. We send our billing out every month. We don't immediately get payment. It's probably around 30 days. So our collection for October is probably going to be for the month before's fees. So if there's a variance in that, I have to figure out not what I'm billing, but what I'm going to collect in October, what I'm going to collect in November. Timing. I think this is probably the hardest, because you get that wonderful grant award and it's big, and then you're waiting and you're waiting and you're like, when are they going to pay? Timing of grants after the award letter, reimbursable grants, paying up front. And that's why a projection by month is very nice, because you might say, okay, the funder is going to pay me and I'm going to be able to use $5,000 of that $100,000 grant in September. But guess what? They had a lag in payment. So you're not going to get that cash until November. So you're like, okay, I have to change it. I have to put 0 in this month, and then I have to move it over. So it's a constant fun thing of updating and rolling forward your kind of assumptions or the reality of your assumptions. Now think about this. A lot of stuff happened with COVID funding and unrestricted funds and the ability to just now use your cash, or here's a bunch of money because you are delivering frontline services. But then that grant award will end. I've hired those 5 people. Oh, they're going to fund something else this year. So kind of calculating the inflow or lack of inflow on grants that end. Fees for service, will you have a price increase? Do you get any sort of increase with grant funding? Will you have a decrease? So just before you start putting numbers in a spreadsheet, just brainstorm. Again, get that whiteboard out, that slide that had nothing on it, and start dumping information so that you can make decisions about what you're going to put in your projection. I have a lot of things on outflows here to consider, but I can talk about Support Kansas City. When we think about our big cash outflows, retirement match payment, that is a big amount at one time during the year. So our cash position, if it looks great, still have to keep in your mind that we've got a big payout here that has to be paid. And it's going to occur, maybe it's in March, but insurance gets renewed at the same time. So that's another big payment. Or, we have to buy our QuickBooks subscriptions again. That all may occur within 2 months. And if our cash inflow is very equal throughout the year, but our cash outflow has really big chunks in certain months or quarters, that's where it's good to have a projection so that you can say, oh, look, first quarter doesn't look great. We've got to make sure we set aside money to cover those expenses. When you're doing a projection, look at your payroll frequency. If you're doing a monthly projection and you have 26 payroll periods, and you only put 2 payroll periods in that projection, and with 26 payrolls, you should have had 3, you're going to be way off on your cash projection, and that could cause some issues with cash flow. Another thing we try to keep track of, and this doesn't happen very often, but outflows that don't happen every year. Maybe you have a subscription that's multi-year and you're like, oh, every 3 years or 5 years, I have to outlay this dollar amount. Our QuickBooks, we do every 2 years. So our cash flow is going to look different this next year since we bought it in 21. Another thing you're hearing a lot about is inflation and increased costs. Salary and benefits is just one. It could be insurance. It could be your service provider fees. Anything, take a look and be very conservative, meaning when you project out your cash flow going forward, factor in like a cost of living increase. And we know that they're saying that's really large this next year. So don't be afraid to put a 6% increase across the board. And as you go through and look at your projection, you can refine it as you understand, like, oh, they only raised it 3%, or, oh my gosh, they raised it 10%. You can refine that as you go along. Another consideration for cash flow is outflows that are not on your regular profit and loss. Principal payments or capital purchases, which are still cash obligations, but may not be within your accrual budget. Another key piece to be able to start this projection is historical data. It helps you identify your income and expenses by month, which I think is probably the best way to do a projection. If you don't pull reports out of your accounting system, have the accountant send it over to you so you can start looking at it. Multiple year profit and loss by month to identify trends. You can also look at who you pay, your vendor payments. So as you're doing all your considerations, you can be like, oh, I forgot about that vendor. That's usually, $5,000, and we pay them in December every year. Payroll reports are good you may spend, since payroll is a large amount of your expenses, you may spend like half a day running scenarios about the cash flow in your payroll going forward. So it's important to kind of section things off that are big, like payroll, and really spend the time in making sure that you know what your cash impact is through payroll. Not just salaries, but benefits, taxes, education, all the things surrounding payroll. Also leases and agreements. Our leases increases over time and it changes mid-year sometimes. So you have to be aware if you're doing a projection by month, what month things start changing. So I'm going to show you a template now. And I found this template on the nonprofit finance network. And I think it's probably the best example that I've seen. And they also have a ton of resources. And if you want to watch another PowerPoint presentation, they have one that has, it's very broad, And it's a really good PowerPoint presentation about pulling together and considerations for cash flow. I'm going to show you this here. So we will share this as well. So the Nonprofit Finance Fund is really showing a template here, and they're really good at Excel. They know how to expand and contract and get some really great detail in areas so that you can put all your inflows in here, right? And so you could just go for days about different inflows. But yeah, if you're trying to have a conversation and you want to see the big picture, you can condense it. So if you need help formatting something, we can schedule a time to help put together something that will help you. And as I've said in other presentations, it's always good to have an Excel buddy to make sure that your formulas work and you don't have hidden columns and everything foots, because Excel has a way of, it likes to come back and bite you sometimes if you don't treat it correctly. But here's how this is set up. You will have a budget for the year. You can put your budget in as a cash budget, but then you see they want, excuse me, to break down by month what you project your cash flow to be. So that's why in this, you can have all this, you need the detail, right? To be able to start thinking through all those considerations and putting dollar amounts in here. But you're really starting with the cash balance. And they want you to put the beginning cash balance here. The beginning operating cash without restrictions. So they have different levels of cash balances here. But as we talked, if you do a calculation and say, I have $100,000 in the bank account, but 50,000 of that is for a project that I am starting in 3 months. I am not going to put $100,000 as my beginning operating cash. I'm going to put 50,000 here. And so understanding the number to put here at the beginning, just as I had in the beginning of this presentation, is really key in having the right number or calculating a true cash projection. So then you will just drop in. It's just super easy, right? You just drop in your earnings and you're contributed without restrictions, you're unrestricted, and then your operating cash spent, ending operating cash. And then this is a really key section. So up here, you've put all your unrestricted cash that's coming in and all your expenses coming out, probably even those that are restricted, right? So you're not going to have two budgets, one for restricted cash and one for unrestricted cash. This section up here, you could say, is all the unrestricted cash that's coming in, all the expenses that are going out in the month, including those that are covered by restricted funders. And then down in this section right here, and you could title this anything you want to better help you understand the flow. You could say, well, what cash am I able to use this month? So for example, we get a funder that covers some of our salaries, and we divide that by 12. And I know that $1,000 each month is now available for me. They pay it all up front. They pay us $12,000. I know $1,000 a month is available now because I'm going to have $1,000 up here in operating expenses. So I'm going to put down here that I can use $1,000 of that restricted funder's money. It now becomes cash inflow. And then that helps me calculate the ending operating cash balance. So this is a very condensed, simple way, but I think the key to the projection here is consideration of the release of restricted cash. And that's so important. And it's actually so complicated that you may need some assistance. And again, a buddy to help you run through several months of this, and then you'll get it and you'll have it set up, and it will, I promise, it will become much easier when you make it your own and it represents the numbers and the funders that you're using. And we'll circle back to questions. I will share this and happy to walk through with people this format. All right. So after you run this by month, you may see a red light here. What if it indicates a cash flow issue? Again, you could have a line of credit or a loan. Time to really dig down for that fund development. Maybe you have a fundraiser or a capital campaign that is happening, or you're going to have to review your expenditures for reductions. So now what? You've cleared off your calendar, you've done your considerations, you've put together this magical spreadsheet. What are you going to do with it now? This is a living document that needs constant attention and updating. You need to compare it against actual cash. Again, that's something that your accountant can help you with or walk through each month, because sometimes if you're a small organization, you have just a few funders, calculating actual cash in and out is easier than like if you have a lot of fees for service and accounts receivable. Sometimes you have to do additional work just to make sure you're comparing apples to apples about cash actual versus your projected cash. Make modifications as needed. Things aren't always going to happen as planned. Funders may pay early, they may pay late. That expense may have been put on a credit card, so it may actually be paid a month later. Communicate concerns to board. I think this is so important. It's really hard to have conversations with board and leadership about cash flow issues, but well-informed leaders can hopefully feel more confident in communicating to the board or stakeholders about their needs or about the fact that we're going to be in a good cash position in 3 months. But look, right now it's just really hard because the funder hasn't paid us. And we just in the past month have had conversations with organizations that are like, we're having a really hard time with cash flow because we have a big bucket of money coming for a project and it's from multiple funders. But right now, we're just trying to meet all our obligations until that money comes in. Or the money is coming from the funder and you have to drive across town just to get it to the bank to pay your payroll, because that's the way that nonprofits live. So the communication, as you can see, that spreadsheet that I showed you could be really long. And if you showed the expanded version to the board, you probably lose them. I may have already lost you by showing you that expanded. But for the internal, for your operational support, or even your finance committee, or if you have an accountant or someone that's helping you pull together your projection, it's great to have that level of detail so that you can constantly refine it. External for your board with high-level indicators, it may be that condensed version of a cash flow, or you may have a dashboard that shows you that you've had a discussion. When it hits less than 3 months worth of cash reserve, then we're going to have a talk. So you may have an indicator on maybe your regular board reports that doesn't include a really detailed cash flow. So that is the presentation that I flew through. There's a lot of things that are unique to, I'm sure, your organization, that you have thoughts running through your head about, well, how would I turn my budget or my historical information into a cash flow, or I have no idea how to pull out my restricted versus unrestricted cash. So at this time, I'd ask if anybody wants to share questions, or even I've seen a lot of really great clients spreadsheets that they've put together to do their own internal cash flows. So I'd welcome any examples or feedback.
Are there any questions?
I don't have a question. I just have a comment. We have like a financial person that handles all of our data about financial stuff, but I don't think our day-to-day staff people really have access or understand that information. Do you have any suggestions? Because it's a contracted third party. Do you have any suggestions on how we might be able to pull a high-level summary of that information that will help us make better decisions as we move forward with our programming?
I think what I would do is just maybe start asking for some historical information, especially historical profit and loss is usually where I start. I know with our organization that most of our expenses are cash, and except for those like big bucket items that we, for accounting purposes, we're spreading them throughout the year, like insurance. But I take the historical, I'll take 12 months from last year, and then I just start looking at it and maybe poking in numbers, and I have them send it to you in an Excel format if possible. But it's really important to have it in the format of your chart of accounts. And your chart of accounts should really reflect, how you're how you operate, right? And we talked about in the budget conversation, but that's where I would start is with that. And you can always add things to the bottom, like, hey, we want to set aside 5% of our cash every month for reserve. You could even add a line in and put reserve, but understanding your cash flow, you could also ask them maybe for a vendor report and the dollar amount for a year, so that you could start getting a handle on that. And comparing it to actual, they may have to help you with that. If you just look at a profit and loss and say, well, what's this dollar amount? This wasn't in our projection. So you may have to get some additional reports from them on a regular basis.
Thank you very much. That's a good idea. I like thinking about it in an annual view. So thank you for that.
Hi. This was so helpful. Youth ambassadors, we're so tiny, but every summer we spend a ton of money for our summer programming with youth. And sometimes it's like $100,000, but that's a lot of money for us. So this was very helpful. And I know our board is starting to look more at cash flow. But I had a question. You mentioned something that kind of caught my eye, like, ooh, I think we need to look at this as well. Are there any strategies or best practices for how to start to build a cash reserve? We, in the past, there was years and years ago, we were that group where we were, struggling to make payroll. And it happened once and everyone was like, oh no, how could this happen? So we're kind of evolving out of that. Is it simply like just dive on in and get started, or are there some steps that we can take to try to see, as we're building revenue, as we're working to project cash flow and looking at our budget, are there some kind of small scale tips we can start to do now to look at how to build cash so that we can just keep ourselves financially stable?
That is a great question. I think that it would be on that spreadsheet that I was showing you, you could add even a section If that is a board objective to build, X amount of reserve, X number of months, that you could put in your projection, okay, that's good. What does that look like? Is that going to need to be $1,000 a month? That it's literally an expense, right? Because you're going to remove that money from operations and set it aside. So I would just add it as an expense line item. And that would really be, and I talked a lot about restricted cash, but you could also, when you're calculating operating cash, do not include any reserves unless that you're releasing some for operations. So if you have 50,000 set aside, don't include that in that beginning number, because you don't want anybody to see that, because you don't want to touch that. That is for that rainy day when you see the negative number at the bottom of that calculation. And then you can talk about, okay, we're gonna have to use, or we can't do $1,000 this month because look, we can't even meet payroll. And I think that really, this monthly projection will tell you, like, yeah, that's a great idea, but we can't even cover our expenses right now. So we're gonna have to have a bigger talk about why this isn't realistic, even though the board would love us to have some reserves.
That's awesome. Thank you so much.